Friday again, and I hope you're all having a wonderful time. Just wanted to let you know what's going on today with the VEPs on Bitcoin. If you look at the daily, like I mentioned in the previous video, the asset is approaching the 30 power mean, smoothing like 10. And if it closes above it, yay, especially if it does that again tomorrow. And then even if it continues to go up tomorrow, wonderful, even if it's a small amount. And if it pulls back a bit on Sunday and then or on Monday, but stays above that power mean, it'll be generally good for the buy pressure on the daily time frame. Now, does that mean that it's necessarily going to close above the power mean today? No, it doesn't. It might be very close to it, and it might do it. There are pretty good probabilities for it, but there are also pretty good probabilities it's going to go to the downside. If you look at the volatility reads on the daily time frame, just as an example, they're not looking particularly to the upside right now. It's a bit mixed and mostly leaning down. There is a fairly tight central daily range of the VRE. It's like 0.2% of the asset's value. What does that mean? That means that it is most probably a trending day. And we've already seen, a couple of tiny, small trending moves on the day so far. Certainly could be more in the run-up to traditional market open or shortly after traditional market open or at market open. And again, throughout the day, we can see more trending moves. Certainly they could be more significant than the tiny movements we've seen so far today. And the central daily range has been tested already, like multiple times in the first 6 hours of the day so far. Now it's 7 hours or 8 hours that have gone by since the beginning of the day, but I haven't looked at the chart in the last hour really, although I did look at it some minutes ago when I just reconfirmed what the daily AVRs are doing. But apart from that, didn't really look at the price chart significantly over the last couple of hours. But earlier in the day I did, and I saw already that the CDR of the VRE had been tested thoroughly, and since it is most probably a trending day, we will probably see more than the tiny little attempts at a trending move that we've seen. Right, we've seen like a couple of small little trending moves on the 15-minute, and obviously you'll see more trending moves on lower time frames as you will on any given day. But the 15-minute is a good intraday monitor to keep an eye on for trending moves, of note on the given day, as it usually is. Of course, you can have trending moves on higher time frames that will also, be built up once the lower time frame ones are making their due, making their effect on the chart. Now, what is this? Trump said no tax on overtime. Look it up. What? Howdy, what's happening? Who knows? What? No tax on overtime. Okay, I don't know. What does it have to do with Bitcoin? I'm just curious. It doesn't really. And also, for what it's worth, I don't take any politician's word at face value, having worked with many of them at the very highest levels, and having worked with Trump and Biden, having done work with them, lobbying them, advising them, speaking with them about business and politics and tech way back in the 1990s when they were both very different people. But I don't take any politician's word at face value. They are all, virtually all. It is extremely hard to find a politician who isn't. Politicians are virtually all liars, scoundrels, and thieves, or liars, cheats, and scoundrels, however you want to say it. That's my opinion. That's part of their job description to lie, and it's part of their job function to cheat or steal and be scoundrels, whether you like it or not, right? That's their job. Their job is to do the dirty work that people don't want to know and want to clutch their pearls and pretend doesn't happen by people who are in positions of authority and power. No, all politicians, I don't care what party they're in, I don't care if you think they're politicians or not, if you run for office, you're a politician. If you're campaigning to be elected to something, you are a politician. If you become appointed to a political office by hook or by crook or by some legal loophole and you accept that position, you are a politician. Okay. So when people tell me, oh, so and so isn't a politician, he's different. No, you can't not be a politician if you're running to be president. You can't not be a politician if you have been president. You can't not be a politician if you're running for president again, even after you've lost your reelection campaign. You can't not be a politician if you're the vice president of the United States trying to become president. That's not a thing. They're all by definition politicians. So that's why I look at Bitcoin instead. And I could care less about what the bloviating talking heads in Washington, D.C. say, whether they're elected Congress people or not. I just don't care what they say, because they're all liars, cheats, and scoundrels. So what I'm looking at more interesting is Bitcoin, right? Because Bitcoin solves a lot of problems. Now, it doesn't solve every problem, but it solves a lot of problems. And one of the problems that it solves is giving people who hold a bunch of it a very high probability of having more significant financial freedom and security in the future, among other things. More ability to transact values. As you know, I value the ability to transact values higher than I value the price of the coin. I value the ability to use it to communicate in an uncensored way more than I value the price. Okay? Yeah, the price is nice and all that stuff, but yes, it's moot. Especially if, as I'm a trader, I don't care about the price when it comes to my trades. Do I care about it? Do I care about price as an investor? Sure, I care about price as an investor, but I don't really care about it nearly as much as I care about all its other wonderful qualities. And one of those qualities is the ability to transfer values. Now, when it comes to trading, sure, I care about the direction of my trade being in line with the direction of the asset. Right? That's all I care about. I don't care if it goes up or down or sideways, for that matter. Right? As long as my trades are in the same direction as the asset. Right? So if it's going up, I want my trades to be long. If it's going down, I want my trades to be going short, obviously. And I want to place those trades before they start going up or down. Right? And there will always be hills and valleys on the price action, because the price action is just following the returns. And what are the returns doing? If you look at the alpha trading returns oscillator indicator, you'll see returns just go up, down, and sideways, right? Mostly up and down, right? That's all they do. Returns distribute away from the mean of returns, and then they mean revert to the mean of returns. That's all returns do. They distribute from the mean, and they revert to the mean, right? And they can do that going up, down, or sideways. And the price action just follows those returns. So if you look at today's returns oscillator, and if you look at the lower time frames returns oscillators, you'll see very clearly, all right, what the returns are doing. And you'll notice that the price action is pretty much following that. Does it sometimes fall out of line by a step or two? Yes, it does. Why does it do that? A lot of reasons. One is correlation, right, of the returns oscillator, right? And the other one, and the correlation of the returns oscillator to the past price action. And the other one is geometric Brownian motion, right? Otherwise known as randomness. Randomness is what happens most of the time on the market. And sometimes it's in line with what the indicators are suggesting is probably going to happen. Sometimes it's not in line. Usually it is in line. But very often, or often enough, you'll get geometric Brownian motion that does the, something wild, something unexpected. Yay. Why? Because any market with millions of people in it, right, or even hundreds of thousands of people trading it, is going to have randomness. You can never know the full extent of every single person or every single computer's thinking or rules or processes for pulling a trade when they pull a trade, right? Therefore, there's randomness, and that's why we use things like our entropy indicator. What does that show us? That shows us extremely clearly when an asset is on a random walk or when the asset is on a trending move. That's all it does, really. And when you correlate that entropy indicator with another entropy indicator. There's a few of them at least you can use. There's our Shannon entropy percentile entropy indicator, and there's our AME/A2EPP, or the A2.EPP indicator. When you correlate the AME with the A2.EPP, you see, just like with volatility and correlation, you see entropy and correlation indicating to you the probable direction of the asset, right? Based on the entropy, because that it works just like volatility does, in the sense of it gives you the very high probability of the tendency of the price action. Right? And we know that is measurable. We know that that's why the leading HFT firms who are aware about how to use entropy are also using that, right? Not most of them yet, or some people at most of them maybe, but in general, they're still using mostly normal distribution and Laplace distribution, but and variance and volatility and all that stuff at the very top HFT firms, right? Not at a bunch of big hedge funds or big trading firms that have a lot of money, but for some reason don't like the idea of using historical volatility along with implied volatility. The folks over at Tasty, for example, they love that implied volatility, but they completely ignore historical volatility. Historical volatility is incredibly important, because when you use historical volatility together with implied volatility and you calculate the alpha volatility grade, you can see whether or not the quality of the volatility is high or low, or somewhere in the middle. And when you correlate volatility with the past price action, right, then you get the direction of the asset. Generally speaking, just like with the returns, you will see what the price action will do. It will generally follow the returns. It's really that simple. It's not rocket science. Like, anyone can learn this, and anyone can do this if you have half a brain in your head, and you can learn the 6 basic tendencies of volatility, and they're also the 6 basic tendencies of entropy. So anyway, that's for you to think about. And here we go. If that's all you care about, I hope you find your way out of the woods. I don't know. What do you mean? Is it all I care about? No, it's not all I care. I don't know. No, Bitcoin's not all I care about. But I definitely prefer to think about Bitcoin than I do to think about politicians who are liars, scoundrels, and thieves. Well, I day trade a few times a week. It is not my life. Great. That shouldn't be anybody's life. Nobody's work should be their life, hopefully. Right? I mean, maybe it can be your life's purpose. Maybe it can be something you do most of your waking hours, but it shouldn't be the be-all and end-all of anyone's life. It doesn't matter what profession you have, right? Whether you're a day trader or a doctor or a lawyer or an engineer, it doesn't matter. Even if you're a volunteer in a charity organization, or you're a nurse or a nun, or it doesn't matter what you do, you're an army reservist, whatever. Nobody's work should be their life. No, your life shouldn't be defined by your job, but that doesn't mean that day trading isn't interesting, and I happen to day trade. If you want to call it that. I scalp mostly, very low time frames, and I'm not telling anybody that they should. That's for sure. And frankly, most people shouldn't. Right? In my opinion, most people should not be trading. Why? Because most people do not have the tenacity. They don't have the temperament. They don't have the perseverance for it. They don't have the ability to learn these 6 basic things and do what is necessary. It's the doing what is necessary where most people fail. Because learning 6 things, anybody should be able to learn 6 things unless they have some serious mental handicap. But doing the thing is the stumbling block, right? What are the 3 things people don't actually do the most that they need to do? 1, they don't take profit early and often. 2, they don't limit their loss. And 3, they trade when they're emotionally attached to their trades. Right? They get into trades that they're emotionally attached to, and they stay in them, and they don't know when to get out. Like, are you allergic to the red button or the green button? You shouldn't be. And if you are, just invert the chart. Okay? Like, if you only want to go long, hey man, just invert the chart. If it looks like it's, if on the normal scale it looks like it's going down, and you only want to go up, invert the chart and trade the other side of the pair. Right? It makes no sense what people do. People behave extremely irrationally when it comes to trading. They take bad trades, they buy high, they sell low, they use leverage when they shouldn't, right? And then they use even more leverage when they really shouldn't. And then they get wrecked and they complain, oh, why didn't I, why is trading so hard? It seems like the market's against me. No, the market's not against you, right? The big exchanges are against you. The counterparty to your trade is against you. The market in general is many people all buying and selling, right? And what are you doing? Are you buying or selling, right? It's not that the market is against you. Yes, you are being targeted by your exchange, or if you're using an A-book exchange that doesn't necessarily trade against you, they are very likely to be, and almost guaranteed to be, selling your information, your order flow information, and everybody else's order flow information to big whales who use their exchange, right? So in that sense, yes, the exchanges are against you. When you trade on an exchange, and even if you don't use leverage, they're trading against you, right? If you're consistently winning trades, they're definitely targeting you. Even if you're winning small trades consistently, they are targeting you. Your name is coming up in meetings. I can assure you of this because I used to participate in those meetings. Okay, I for many years marketed financial trading devices and platforms in the traditional finance world and in the gaming world and everything else and in the crypto world. And I can tell you, as a person who has marketed these things, we look exactly, and for doing marketing and sales and customer service and all kinds of stuff related to that, we look for the small accounts that are like 3 to 5K in size. We look how to get all their money as quickly as possible. That's what we would do. The fact that there's somebody who's a millionaire coming on once a month losing all their money, that's just gravy. But the companies don't make their bread and butter on those couple $1 million from a whale or two or even 10. They make their big money from the small accounts that come on and put anywhere from 2 to 5K on their accounts. That's where we get most of the money. Well, the companies that run exchanges, they're getting money from the people who are losing between 2 and 5K. That's where they're getting most of their money. Why don't you set up a day trading room here on the YouTube? That's a good question. And sounds like it is yours, and you said it is all you care about. No, it's not all I care about. I care about Bitcoin more than I care about politics. Okay, having worked in politics, I don't care much for it. I've seen how the sausage is made. I find it all to be corrupt, and there are some systems that are better than others, but it doesn't mean I like even the quote-unquote best ones, right? Democracy is the worst form of government except for all the other ones, but even democracy, the way it is currently existing in its many forms, are not to my liking, right? That's just my matter of opinion. It doesn't matter if you agree with me or not, and even if you don't, wonderful, that's great. I'm glad we have the ability to disagree. Now, why don't I set up a trading room on YouTube? That's a very good question. The answer is because of legal liabilities. I'm not going to send out signals or anything like that on YouTube, right? For you should buy now or you should sell now, because that's insane. Because first of all, that misinforms people. Second of all, there's no way you can actually get the same trade as I can, because the moment I enter my trade, unless you literally have your trade copying my trade at that exact moment, right? There's no way you can be in the same trade, right? So I'm not going to ever do that. Second of all, it's a legal liability. Even if it may be legal now, SEC and FTC or CFTC may retroactively make it illegal. Vegas keeps the lights on 25 cents at a time. Exactly. Vegas keeps the lights on 25 cents at a time. No, just show people what you're doing. Oh, we do show people what we're doing with the VEPs. If you come into the Alpha Trading live stream, those start at 9 a.m. U.S. Eastern Time, Monday through Friday, and you can join us. And the URL for that is you just go to the Alpha Trading Discord at alphatradinghq.com/Discord. You just enter there for free. Or you can just go to our Rumble stream. Just look up Alpha Trading or Alpha Trading VEPs, VEPS, Alpha Trading VEPs on Rumble, and you'll find us there streaming. Again, like I said, we start usually at 9 a.m. U.S. Eastern Time, Monday through Friday. All right, guys, that's it. I'm just going to get going. So happy trading. Take care.